Alrighty, good afternoon, everybody. Hope you enjoyed your weekend. Hope you enjoyed last week's nice rally all week. Hopefully, we can see some more of that. So, let's find out, shall we? So, going into this week, looking at four stocks, and first one is going to be, let's see, Costco. Okay, so Costco. Let me zoom in. You can see definitely bullish run. Then we had our dip here, and we're starting to see it look like it's gonna bounce here off the lows. Okay, we've got it running up. It kind of consolidated a little bit, and then we got this push up here after holding support. Now we got a squeeze building, and we're coming up right to that 50-day moving average. I do like Costco long, but watch it. We got 4 straight days up, taking it long. Right at the 50-day, you might have to wait for a pullback, maybe midweek or something, or if it breaks above the 50-day. That's a lot of good candles straight up here. Pullback is evident. It's right at resistance, right? 488 area. So I like it long. I want to see it break through. So I'd be looking at like a 455 put spread, just shy of the support area down here. All right, so on Costco, August, so it's going to give it a lot of time. And then right now, 455, 450s for about a buck 30 or better. Okay, 67 pop, which is really good for a vertical spread. And then of course you are defined. Now, if it say gaps up and it gets above the 50-day, you'll probably have to hit the 460s, which is still going to be a 64 pop. Okay, and you get like $1.40. All right, and that's right at a 30 delta. So for now, 455s. If it gaps up tomorrow, then we're looking like 460s. Okay. All right, next one gonna be McDonald's with a poor man's covered call. Unless you got the buying power to do a covered call on McDonald's, and I'll show you how much it is. But um, I like it long. Okay, it is coming up to the 200-day again. We got this consolidation, but that's okay. So I want to see this continue to run up, and I'm looking at selling a 260 covered call right there at resistance. All right. So on McDonald's, I would be going to July 29th weekly, selling the 260 call, okay, and then going to January and buying the 240 call, plus or minus $19.25, 19.20. Okay, it's a debit. It's going to be $1,920. So it is a little bit expensive doing the poor man. You also don't get a dividend, but it's going to be a while before the next dividend, anyways, because it's doing it right now. All right. No max profit because it's two contracts, two separate contracts, so it can't calculate it. But essentially, you want to see the 260 run. Okay, it's just like a covered call. Now, if you have the buying power to do something like that, then you go just into January 29th and do a covered call. And as you can see, it's 12 grand for only $1,400. To me, that's a little much. I'd rather do $1,900, right? Like I said, there's no dividend anytime soon, so you'd be waiting if you did it this way anyways, just to get the advantage of that dividend. Okay. All right. Next one is gonna be Snap. All right. So Snap. Actually, want to do a little bit of a strangle on. Got killed, right? But we're seeing after this gap down here some consolidation, little bit of curving over. Not sure how strong it's gonna be. So what I'm just looking at doing is selling a strangle. I believe it's neutral, maybe slightly short. But I'm want to get above this gap fill and the 50 days. So I'm looking at 23 call, and then I want to sell a 7 put below, what is that, 3.5, almost $4 below the 2-year low. So you got some wiggle room. If it does decide to go sideways, great. If it goes up a little bit, you've got a lot of run room. If it goes down, that's fine. So on Snap, This is July 29th, 33 days out, the weeklies, because I don't want to go too far on a strangle. And I'm sorry, not the 7. It was the 9. Maybe that one. Meet in the middle here a little bit. Now we'll stay with 9. Let me see what that was. 9. Had the 7s on there. There we go. Still past expected move there. All right. So a 9 put on the weekly, right at a 7 delta, $2 past expected move, and a 23 call at a 9 delta here. Okay. 1, 2, 3, 4, $5 past expected move. So you got a lot more wiggle room to the upside. It leans it short with 3 contracts if you get like 35 cents or better to get that $100. 3.5 short delta, so still leans it short but gives a lot of run room to the upside. 85 pop, okay, and it's less than $900. All right, and the last one here is XBI. I like XBI to the upside. It did get hit, and this is the biotech, but we did break above the 50 on Thursday. We held it, and all moving averages are pointing up. We got the 8 and 21 crossed over. We got good momentum to the upside. So I want to see this continue to push. It's got a little bit of resistance right around 79, but after that, it's pretty much the 200 day. You got all the way up to 96. So I would like, and I didn't put it on the chart, I would like to sell 71. That is here. Right there. So the 71 put spread. Okay. Right at some support. And looking for this to run up. With XBI. August, so give it some time here. The 71 puts, and then buy the 66. $1.35 would be ideal. 66 pop. Right. Good odds here on this one. Alrighty. And that's going to be it, you guys. Still playing it kind of cautious. Trade small. Who knows what's going to happen while markets look like they're going up. That could easily change this week again. So trade small, trade often. Don't overtrade. And have a great rest of your weekend. Maybe one day I'll see you in chat. Take care, everybody.